What's going on, guys? So I kind of want to give you guys a little trade recap, kind of show you guys what I was looking for. I did take a short position on Amazon today, and I kind of want to show you guys exactly what I was looking for. So I knew coming into the day the market was coming off of some weakness from yesterday. I wasn't expecting to trade too much. My bias for the day was to the downside. However, we did get a little bit of a dead cat bounce at the market open, kind of traded around sideways and very choppy. And a lot of the names that I like to play really wasn't too much out there. And I was really okay with not taking a trade today. I was going to let something come and fall in my lap. And if it did fall in my lap, I was going to take that trade for a very, very short cash flow scalp. So I wasn't looking for a big measured potential move on anything today. If something was to fall in my lap, I was going to take it, but only if it kind of matched up with my bias, which was to the downside, and also a very, very short cash flow move. So just going into, if I bring out my drawing tool here, just going into this candle here that I put a little dot on, this is the opening candle. I am on the Pacific Coast Standard Time, so my first hour candle is going to start at 6 a.m. and it's going to close at 7 a.m. Obviously, the market is going to open at 6:30. So normally what I'm looking for, if I'm looking for us to go long in a stock off the open based on if there's room to run, meaning that the stock chart looks good, the stock chart is in my favor, meaning if I'm looking to long, we are above supply. And if I'm looking to short, normally we are at demand or getting ready to flush through demand. So we did have this nice candle off the open here. We kind of tagged this 34, 30, 34, or 35, 40, 35, 40, 30 area. So what I was looking for here in this 34, 40 area was if we could confirm this price action, did we have room to the upside? We did, but the room to the upside was only going to take us to about 35.50. We were going to get met with a little bit of resistance here. So 10 points to the upside when the overall sentiment was down on Amazon yesterday is not really the setup that I was looking to take. I was looking to play this stock short. So you can see here during the pre-market, we did come down here and tag the 10-day moving average on the hourly time frame. I do play the hourly candles just because there's only 6 of them in the day. It's a lot more easier to gauge the overall movement and direction of the stock. And normally, typically, when these candles confirm, if there's enough room to the next area of supply or down to the next area of demand, normally they have an explosive move. And being that I'm a scalper slash day trader, I can get in on these moves and ride them for a couple of points down, make some money, and then get out of the trade. So what I was looking for here is under 3,500. Okay. So the 10-day moving average was here. We did tag this on the first hourly candle with this bottoming tail. So below 3,500, I was looking to short Amazon. Why was I looking to short Amazon below 3,500? Because the next area of demand was the 100 simple moving average on the 1 hour time frame, and that was sitting down at around 34.85. So we did have about 16 to 20 points worth of measured potential. So when I say measured potential, what I'm looking at is how much room is there to the next area of demand? How much room is there to the next area of supply? If they're all stacked up on top of this and there's 1, 2 points, 3 points in between moves, me being an options trader, there's not enough measured potential for me to take a trade. I really need to be able to have the stock enough room to run, whether that be long or short. So when I do play these options, I can get an extended move in my favor and be able to make some cash flow on those contracts and exit accordingly. So 3,500 is what I was looking for here. 7 a.m. candle did come down, tag the 10-day moving average here. However, did not break this 3,500. 8 a.m. candle did come up, get stuffed at the 20, came back down, tried to test the 10, cracked it. However, came close to touching this 3,500. However, bulls quickly bought this back up and closed above the 10. And then at 9 a.m., this is the candle that started to work its way down to the downside. Did come up and get stuffed at the 5-day moving average here, broke through the 10-day moving average. So I'm starting to see volume pick up. I'm starting to see momentum go in the favor of the trade that I'm looking to take. That is $3,500 short. As soon as we come down here to this 3,500 area, we immediately crack it. And you can see, typically when you're playing hourly candles and you have these buildups and the candles do confirm, and especially on the stocks in the NASDAQ, especially these mega cap stocks, they're going to break through that pivot normally, and they're going to give you enough room, 50 cents, $1, $2, $3, $5, extremely fast, so you can get in on these breaks and make money on the trade without having to watch maybe the 1 minute or the 5 minute time frame where the stock is going up 20 cents, down 10 cents, up 30 cents, down 50 cents. And it's kind of just all over the place, like a merry-go-round, just going around and around, and you can't really get a clear direction. You might take a trade, it fakes you out, comes back down, back tests up. I mean, it's just a mess. I like trading the hourly candles. It's a lot easier to read. It's a lot cleaner to read. And normally when the moves work, they tend to work pretty fast. So as soon as this broke 3,500 and I seen some volume coming in behind that, I took my put position here. And as soon as we went down, 5, 10 points or 5, 6, 7 points, I just quickly scaled out and took my profit close to $200. It took me less than 5 minutes on this trade, less than 10 minutes, I think, on this trade. Did come all the way down here, tagged the 100, and then kind of bounced and then flushed again. Obviously, I could have held. We did hit lows down here of 37 or 34.71. So that was about a 19-point move. Obviously, my contracts would have been double, triple, quadruple, maybe than what I sold them at. However, that wasn't my game plan for today. My game plan wasn't to just let this ride out and then have this bounce and reverse on me, and me ended up going negative. So I just wanted to look for one clear play. The clear play for me here on Amazon was at 3,500 break. It did take 2 hours for that move to develop. And when it did develop and it flushed, it did flush pretty fast, pretty quickly here from 35.50 down to lows of 35.88. So I was able to make, the couple hundred points that I did on that move and just move right along. Tomorrow's a new day. There is a new setup. So just kind of want to give you guys an inside look on how I took that trade. Where I would have been stopped out on this trade is if we would have cracked through, let's say 3,500, maybe drop down 1 or 2 points and quickly retraced back. If we would have came back up over this 10-day moving average, I probably would have been stopped out for a hefty little loss, just due to the fact that Amazon's contracts are not always the cheapest, and I do play at the money. So could have been a few $100 loss, maybe more. So anytime the move doesn't go in your favor, you want to cut it extremely quick, because if this did come back against me and start to build in the opposite direction, you can lose a lot of money very, very fast. So that's why I always try to recommend people play stocks, especially if you're playing options, that suit your account size. Okay. So if Amazon's contracts are anywhere between, $1,600 and $3,000 for in the money, at the money, and you have an account that's, say, $3,000 or $4,000, you're not going to want to put in 70%, 80% of your account size in one trade, because if it does go against you and you do lose $300, $400, $500 on a particular trade, it's not that you lost $300 or $400 or $500 on that trade. You are just sized out of your account, meaning that if you were to take a play on another stock, let's say contracts are running you $200, and that move failed on you, instead of losing $200, $300, $400, you would be losing $20, $30, $40. So that's the big difference. The idea of the game is to stay in the game. So even though, yes, you can make a lot of money on Amazon, you can make a ton of money trading Tesla, you can make a ton of money trading Nvidia, these premiums are not that cheap. So when you do play these stocks and the moves do work against you, or it is chopping around a lot, your P&L can be fluctuating a lot. And if that makes you nervous, or you're holding, the mouse and holding the seat of your chair very, very tightly, expecting that move to go in your favor, I can tell you this, that you're oversized. Okay. You're oversized cut it down, play some contracts that are maybe $200-300. So that way, if you are down $20, $30, $40, it's not that much of a hit. The whole idea with trading is to be nice and relaxed. You want to be able to play the technicals. And if the move fails, you know, it's no skin off your back. You're not going to be too upset about the loss. You just move on, look for the next setup, because the one setups that do work on an account that size could be an $80, $100, $150 profit versus a $20, $30, $40, $50 loss. Hope that kind of makes sense. Guys, if you want to join my Discord, that link is down in the description box below. Also, if you would like to check out my website, evolutiontraders.com, I would highly appreciate that. Please leave me a thumbs up, subscribe to my channel, comment, share the video. I'm trying to get this video out to as many people as I can, and I will see you guys all on the next one.